All right, this is going to be NQ 1115 trade review and outlook. Once again, we're going to go over the principles, trade idea, trade, and then finally the outlook. So for the trades that I took today, the principles that I'm applying were liquidity law, and the trade idea simply was a continuation of bearish trend showing in the last video. Based off the outlook, we were looking at bearish price action, so we're just looking for selling opportunities to continue aiming for those 4-hour or those macro liquidity targets. Aiming for the first target shown in the previous trade review, and the entry that the idea or the area that I looked to take a trade on was 15-minute inefficient pricing. So inside of that 15 inefficient pricing, looking at the static view here, what I looked for specifically was 15-minute inefficient pricing, and I believe it was between this wick and here, and so we got complete balance. But once again, I was trading on the CFDs, so I entered a little bit lower here, I guess about 50% of that inefficient pricing at 660, and that was where my entry was. Had my stop loss just above the high based off stop loss rules right here, and then a little bit higher really to account for spread because I was trading CFDs. So if I was trading whatever futures, it would have been there, but because I was trading CUSDs, my top line was my stop loss. So I entered there and just targeted about 100 or whatever pips, or 1,000 pips. And essentially, there's something that I was telling the boys in RCV that I need to actually do. I'm actually going to go full trading CFDs. I said it before in a video, but I decided to try challenge again. But I was like, nah, I really don't like having someone telling me their rules and not being able to hold my trades. And so I'm breaking out of that cycle of day trading, getting back more into swing trading and holding these trades to target, because once again, there was a very, very good opportunity. If I would have held the trade from yesterday, I would be up a lot of money. And that's the thing that's holding me back from making it big in trading. But I'm gonna fix that now. I'm gonna start holding my trades, trading CFDs until I build up the capital base. I believe I said in the previous video it was like $300,000 to $500,000. So half a mil or 300,000, and then I'm gonna switch over to futures and continue from there. But until then, I'm going to trade CFDs. It's going to be the same thing. There are going to be slight price differences from the NOS 100 chart to the NQ chart, but the movement's pretty much still the same, right? So anyway, just a little rant there. This trade, great trade, made about $1,600 on this trade. Could have made a lot more, yeah, but whatever. So now we're going to go ahead and move over into the dynamic charting. Right, so that particular trade was a 1-minute continuation off of 15-minute inefficient pricing, which was just shown. I'll show it again here. Okay. Here. Yep. So inefficient pricing, and it really was like a fill of inefficient pricing, and I'll tell you a little bit more about this. So starting from here, the real play was actually off of this 15-minute sponsored candle, and that was really what sparked this entire move. But I missed that, right? So I'm just looking here, now that I know from the 4-hour or the macro perspective, I'll break it down like this. Knowing the macro perspective is bearish, I no longer look at the macro perspective for entries. Or I'm sorry, for direction. I have my bias. So now, looking for entries, I'm focusing my attention on the micro and nano perspective to formulate those entries, because I'm looking for continuation. The 4-hour is just too large, or there's not enough data provided in that candle on that perspective to frame up a trade setup. So I need to use the lower time frames, or the micro and nano perspectives, to look for those trade setups. And so now that I know from the 4-hour perspective, right, that we are bearish, there's nothing here that just makes sense to me to look for a trade. And if I was, I'd be guessing, but knowing that, hey, the 4-hour is going to take a long time, I might as well just look for the 4-hour data inside of these lower time frames. So going down to the 15-minute time frame and looking for that continuation, what ended up happening on the day was we got a liquidity grab of this high here, right here like this, right? We got a break of structure uninterrupted. Once again, this is key. If you're going to see this over and over, this is like key to how I enter trades and finding my points of interest. Uninterrupted break of structure, liquidity grab to the high side, break to the low side, and uninterrupted. And so now this would have been the entry if I would have been playing this off of the open here, stop loss at the high or at the high of the candle to incorporate the entire risk range, or at the high of the body, right? So that would have been the trade I would have taken. This was the real play. If I was at the charts at the time, this was the play to be at. But because I didn't have that play, and price action basically had mitigated after this run here, it went past this low, everything's mitigated. Everything is balanced up until this point now, so order flow is efficient. Anything below this is now where I want to look for trades. But like I said, on the 15-minute now, after looking at this, I'm like, okay, we're in strong continuation, strong bearish price action. There's not enough information or data being shown here on the 15-minute. So now I go down to the 1 or the nano perspective. And once I go down to the nano perspectives, this gives me a lot of information showing inefficient and efficient order flow. This right here, I would consider it inefficient order flow, but because the momentum's so strong and based off of price action here that happened inside of this turbulence point, and when I say turbulence point, it's an RCV term, go look it up, but it's basically this price action here. We have a stall in price action, balancing or creation really of a trading range. So this was another opportunity to look for a trading range. And then we broke out of it to the low side after we had this wick mitigate this wick. We dropped to the low side here. This has created doji, and then that created inefficient pricing here on the 1 minute from this wick down to this wick here. And so essentially I was trading post turbulence point instead of looking past this turbulence point for a continuation of the trend, because ideally I would not want to see this area, because there's a lot of liquidity built up here. If this was to be run, then this would indicate possibly that we would have a shift in market structure from the micro and nano perspectives. But because we failed this and we're looking for continuation, understanding that the bears have very strong momentum and volume to the downside based off these candles, comparing the green to the black candles, then I want to look for any excuse to enter on a trade based off of the perspective that I have from RCV and developed from there. And so looking at this turbulence point, post turbulence point, we have balanced, or this area is balanced. We've now created inefficient pricing from this wick down to this wick here. We dropped lower. We see price tried to come up here but failed to do so, but it generated an internal point of liquidity inside of this inefficient pricing here. And so once price began to drive back up here, I set a limit here for the open at 660. Had my stop loss at the wick here, and a little bit higher actually for CFDs. And you see price went and mitigated, completely filled this inefficient pricing, and then drove lower. And it actually drove much, much lower. And if we remember from the previous video, previous trade review, I said that the initial target from the macro perspective was this low here, right? That is the initial or intermediate target, I should say. And I completely forgot. I got confused that I was not day trading and I was actually swing trading, and I forgot to hold my trade, and I closed it here after 100 points because I'm so used to doing that. And I actually should have held it to this point and really to the lower, knowing that, hey, if we break this point with some volume, we're definitely moving, going towards this low here. And so, yeah, I ended up making 1,600, but I could have made, close to 5,000 off of this trade, holding it down to this low and really holding it all the way down here. But even further, if I would have held my trade back from up here, from literally yesterday, I was not expecting price actually to hit this low today. I was really expecting it to happen next week, but yeah, I guess the momentum's so strong. But if I would have held this trade here, this would have essentially been So close to something like this, just for kicks and giggles. That's a 15-1, but really it was much better than that. And holding that, knowing that, hey, we're most likely reaching down towards this low, just off of just using a, generic, this would have been like a 32-1, risking 1%, obviously, but not risking 1%. I don't do that. And then go from there. But yeah, so I wish I would have held that trade, but it's fine nonetheless. I actually entered in a trade that I'm going to hold over the weekend and see what happens off of the wick here. And that was basically 15-minute inefficient pricing. Once again, as you can see, we have up close, uninterrupted, mitigated the open, inefficient pricing generated, came back up in there, but there's not enough data shown. So I went down to the 1 minute, and on the 1 minute, it revealed one, we have relatively equal highs. There. Okay, we have relatively equal highs, and understanding how sponsored candles work and incorporating a little bit of the risk range logic, we know that, hey, this is balanced here, but this is a sponsored candle. It mitigated something inside of this wick called uninterrupted price action to the low side. So price needs to come back up. The open is where we want to look for the trade setup, and the stop loss would be above the high here. And so price came and tapped that perfectly and has now rolled over to the downside. So we'll see what happens when the market opens on Monday. If I get stopped out or if we end up staying in profit or whatever. But like I said, I'm holding this as a swing trade where the first target would be this low, but the ultimate target is this 19,905 area, which would be pretty nice. I'll most likely look for new entries as well, or additional entries as we move past this target here, because I can stack up trades on the broker that I'm using and hold them accordingly, right? But as far as the 4-hour perspective goes, or the macro perspective, I kind of just explained it. But essentially, we're just looking for continuation of trend. We see that price action is still bearish, very strong bearish momentum to the high side. We showed efficient pricing as we drove down into this area. The only thing that I would say for the counter analysis would potentially be this area of inefficient pricing here. And the only reason why I would say that is because this inefficient pricing is what caused the break of structure here after the unwillingness occurred. There, right? That's the only reason why I would say that. Notice how this is the last down close candle, mitigated price here, and that caused uninterrupted price action to break here. So if we were, depending on how strong momentum is as we come into this area, there may be opportunity to enter in off of here for buying opportunities. But I guess once again, depending on how structure forms, if structure on the micro and nano time frames generates bullish structure, unwillingness, and then we start shifting to the upside, then we're still looking for bearish ultimate target this low. And depending on how price reacts from this low, we may actually be going much lower, where the next target actually would be this low here. I mean, granted, you could choose, I would say this low, but you can choose any of them, to be honest. But I'm going to say this is my swing low based off of price action. If we were to break this low here with some conviction and some volume and momentum. All right. So yeah, that's it for the NQ 1115 trade review and outlook. Let me know if you guys have any questions, clarification needed on any of the logic that I am employing here. And yeah, see you in the next one. Peace.